In terms of the content of the transfer pricing documentations, group information, as well as indication for non-applicability in the transfer pricing document, it is essential to be included as part of the transfer pricing report. The report needs to be dated, and it has to be dated prior to submission or lodgement of tax returns. There is a change in terms of the arm's length range for 2023. The range has narrowed from 27 to 75% percentile. It has been narrowed to 37.5 to 62.5 percentile. In terms of the transfer pricing adjustment during the tax audit, for 2023, if it's within the arm's length range, if there is no comparability issues, there would not be any adjustment. However, if it's outside the range, the tax office have given clarity that it will only adjust to the medium. However, if there is a comparable issues, the adjustment could be from the medium or above medium. In terms of the offsetting and corresponding adjustment for 2023, they won't allow any corresponding adjustment. If there's any adjustment, prior to that, they allow it. In terms of the comparability analysis for 2023, they only allow a year-on-year basis, and it has eliminated using the weighted average result. A bit of the briefing on the threshold in Malaysia. So for the related party transactions, whether it is domestic or overseas, if you look at the domestic transactions here, any multinational enterprise who carry on business and has a gross income more than 25 million, and the related party transaction is more than 15 million, a full transfer pricing documentation is required. Otherwise, it is a minimum or simplified transfer pricing documentations. However, exemption might apply if a taxpayer can prove that in the event of any tax audit adjustment by the tax office during the tax audit will not alter the total tax payable to the positions, then the transfer pricing documentation is not required. So the key word here is it does not alter the group total tax payable position if it's just purely domestic related party transactions. So this is a big challenge to apply this, because sometimes they will be looking at whether there's any utilization of the losses, tax incentive, even though it is purely domestic related party transactions. The other threshold is we're looking at the, if this related party transaction on providing financial assistance that exceeding 50 million, then the full transfer pricing documentation is required. Otherwise, minimum transfer pricing documentations. So let's look at the next slide on the Malaysia perspective on contemporaneous transfer pricing documentations. So what are the new content that it is required by the tax office? As you can see here, new Schedule 1 is required in terms of the information of multinational enterprise group. Schedule 2, internal information of the local entity. Schedule 3, information on the documents on the cost contribution arrangements, indexing to the document prepared under this rule, and the date on which the contemporaneous transfer pricing documentation is completed. So all this is essential, and it is part of the transfer pricing content. Now let's look at the latest clarity in terms of the intangible property under the TP Rule 2023. As you can see here, in terms of economic contributions over legal ownerships, it has expanded to anyone contributing to the value through the DAMPI function is entitled to compensation regardless of legal ownerships. In terms of the marketing intangible, it clarifies that marketing intangible includes customer-related data and relationship, not just trademark and trade names. So in terms of entitlement to the income, it stresses that the owner is not entitled to the income from the intangible property if they do not perform or control the relevant functions and risks. In terms of the definition and the scope, it offers a broader, clearer definitions, emphasizing on commercial use and expanding the scope of marketing intangible to include customer-related intangibles. So let's look at the meeting the definition of contemporary transfer pricing documentation. What does it mean by this? So these are the 4 areas I need to fulfill. First of all is it must be prepared prior to the due date for furnishing a return. So a challenge on this is because of the comparable data requirement is on a year-to-year basis. And most of the time, there's a challenge in terms of obtaining similar period of comparable data. The second point is it must contain the date of the transfer pricing documentation is completed. It should be part of the report. And it must contain a complete information that is required by the tax office. And it must be furnished to the tax authority within 14 days upon request. So these are the 4 elements where how the tax office in Malaysia define meeting the contemporaneous transfer pricing documentation. Let's look at the emerging TP legislation issue and trend in Malaysia. Common transfer pricing issue litigated. The common one is the recharacterizations. Most of the time, characterizations is not done correctly, resulting to wrong selections of the methodology adopted. Benchmarking analysis, selection of comparable company in terms of similarity, and then in terms of selection of the profit level indicator, whether operating margin or full cost markup method or barrier ratio is appropriate. In terms of methodology, whether CAPs or transfer price TNM method or other methods that's appropriate. The other one is the adjustment at the medium or interquartile range. Now, pricing, in terms of pricing, the tax authority discovered that it is not arm's length. And in terms of intra-group services, they'll be looking at whether any benefit received, incorrect basis of charge, no basis or fixed fee. So these are the common FAQ on matter pertaining to transfer pricing that recently been published by the tax authority. It clarifies in terms of the benchmarking analysis. Previously, prior to 2023, it allows multi-year data, but 2023 onwards, single-year data. As I mentioned just now, the challenge is obtaining the similar period of comparable company. Then you will need to revisit and update the benchmarking analysis and evaluate whether any adjustment are needed. For example, if let's say you are submitting 2023 December year end, which you should be submitting by July 2024, so most of the time similar period of comparable companies are not made available. So as a result, usually we will rely on a prior year comparable company period in terms of calculating the arm's length range. And when come to like the following year, you will need to update the 2023 and revisit back whether it's arm's length range or not. So at the moment, there is a voluntary disclosure incentive that is provided by the tax office where it will consider the surcharge rate instead of 5% to between the range of 0 to 4%. In terms of penalty under Section 113B, for any taxpayer who enter into related party transactions and failure to prepare the contemporaneous transfer pricing record, as well as furnishing the transfer pricing documentation report within 14 days to the tax office upon request, there will be a penalty up to 100,000 or imprisonment of not more than 6 months or both. So this proviso is different from the adjustment surcharge here. So this one is if you do not comply with the preparation of the report, they can actually fine you up to 100,000 or imprisonment of up to 6 months or both. The other one is if there is an adjustment, there will be an adjustment and then surcharge of 5%. So in terms of comparable analysis, again here for overseas benchmarking, it is not encouraged. The tax office in Malaysia would prefer the local data comparable company. However, if it's a very specialized industry where the local comparable data is not available, foreign data may be acceptable, but documentations to support on that basis is important to justify the selection of the foreign comparable data. So let's look at the unplanned range. The transfer pricing 2023 rule have clarify in terms of what is medium. It is a midpoint, and then as you can see here, the range have been narrowed to 37.5 to 62.5. And detailed guidance in terms of the unplanned range and median adjustment has yet to be released, but I think soon they will be releasing the revised Malaysia transfer pricing guideline for clarity. So in terms of what are the key challenges in adopting the new range? So first of all, is provide limited cushion to the taxpayer. So for those taxpayers who have actually prepared their transfer pricing documentation 2022 prior to that, and if your range are at the borderline of the lower quota, you may want to revisit in terms of the transfer pricing range that 2023, it may not within the range because the range had been narrowed. Yeah, so that's another thing, of course, difficulty in reconciling Malaysia range with counterparty jurisdictions, as some of the countries are still adopting a wider range as compared to Malaysian range, yeah. And the other third point to note is the different treatment for cross-border risk to domestic transaction. So let's look at the transfer pricing risk, yeah, involved in that. You will be looking at the 4 type area of risk here. One of it would be the compliance risk, transactional risk, operational risk, as well as reputational risk. So in terms of compliance risk, we are looking at the compliance to transfer pricing legislation and rules, any delineations of the FAR analysis and characterizations, failure to prepare the contemporaneous transfer pricing reports within the stipulated deadline, TP dispute with the tax office, example, the benchmarking analysis, exposure to potential penalty and surcharge. In terms of transactional risk, we're looking at changes in the business model, changes in the transfer pricing policies, as well as restructuring. In terms of the operational risk, we'll be looking at the alignment of transfer pricing with the business strategy, failure of inconsistent internal processes, incorrect transfer pricing leads to incorrect behavior of organization, resulting to misallocations of resources, complexity of TP rules in various countries, with to the cross-border risk. In terms of reputational risk, tax evasion and tax avoidance, damaging the relationship with the tax authority, as well as customer and suppliers. So how to manage this risk? These are some key points that you need to look at. You got to identify the risk and assess financial and tax implication. Constant review of internal control on your accounting and IT system is important. Documenting the basis to support your position. Transparency with the tax office, as well as reporting and mitigating risk with the senior management. Now, key takeaway here, what should a taxpayer or organization needs to consider? You need to ensure that you maintain an updated transfer pricing documentation before submission of corporate tax return. Yeah, appropriate characterizations from the transfer pricing perspective, reference to the function, assets, and risk analysis, reassess on how businesses will be affected by the transfer pricing 2020.